What in the algo failure did we see in after hours? This is not what we're going to talk about here in this video, but look at this on Nvidia, Apple. What is this? The QQQ, Tesla. Look at these candles. All happening at the same time with extensive volume. I'm going to try to figure out what in the world just happened, but Tesla's stock on the 1 minute chart was trading 200 to 400 shares. All of a sudden jumps to 10,000, 15,000, 13,000, 30,000 shares. Same story for all of these stocks. So something strange is happening, to say the least, on Wall Street. And look what came within like 12 hours. Let's see. I think it's, oh boy, Elon Musk. Look at that. You got a rocket on the back, the newest rocket. Yeah, I'm gonna be busy for quite some time, that's for sure. But I ordered this at like 8 o'clock last night, so I'm actually surprised it's here today. So here in this video, we are going to play a clip from Elon Musk and this hearing on AI, and take a listen to what Elon has to say about this. He's very passionate about this specific topic, and he does talk for quite a while, and I think it's good for you to know as the markets are hyped up, whatever word you want to put on AI. It looks like there will be some form of regulation at some point, but regulation is actually a very good thing, and I'll talk about that a little bit here in this video also. Now, on top of that, we're going to get into the retail sales data that will be coming out tomorrow, which is going to be a massive catalyst for our markets that could really rock the boat, per se. On top of that, we're going to get into everything else you need to know on Tesla stock, so sit tight. And if you are an investor in Tesla, hit that like button and comment down below, as well as subscribe to the channel if you guys want to stay up to date with all of this information every single day.
At Capitol Hill, Elon Musk is leaving. This is the hearings on AI currently. Obviously, many of the tech leaders in focus here today. Let's see if we have some sound.
Regulators. I think the key point was really that it's important for us. It's important for us to have a referee, just as you have a referee in a sports game, or all sports games, and that the games are better for it to ensure that the players obey the rules, play fairly. I think it is important for similar reasons to have a regulator, which you can think of as a referee, to ensure that companies take actions that are safe and in the interest of the general public.
Did you tell them that AI is a double-edged sword?
Yes.
And what did you mean by that? Can you explain that?
Well, what did the metaphor?
Yeah, I mean,
well, if you have a sword with two sides, one side can get you, even though you're trying to get someone with the other side.
Right. When you're telling the senators that, though,
that's how it works.
What do you want them to take away from that?
I think it's more important to make sure your hilt is also, you have a hilt, not a sharp thing.
Yeah. Fair enough. What do you think how do you think they took the message that you brought to them?
Well, I think it was very civilized discussion, actually, among some of the smartest people in the world. So I thought Senator Schumer did a great service to humanity here, along with the support of the rest of the Senate. And I think I think something good will come of this. I think this meeting may go down in history as being very important for the future of civilization.
Do you think some legislation is going to come out of this?
Probably. I'm not sure what the time frame of that is, but.
Yeah.
The legislative process is not a swift one.
Yeah, that's true.
But I think things will go in the right direction generally. Senator Schumer, or Leader Schumer, did ask everyone to raise their hands in the room to see if they were in favor of AI regulation, and I believe almost everyone did.
Yeah.
So that's a good sign.
Do you think any of the tech CEOs left and changed their minds? Do you think they were changed by anything they heard from the Senate side?
Well, I can't read their mind, but judging by the fact that they put their hands up when asked if they believe that some regulation is in order, I think I think it's clear that there's a strong consensus, overwhelming consensus that there should be some AI regulation, that it would be in the best interest of the people to do so. And I think we'll probably see something happen. I don't know on what time frame or exactly how it will manifest itself.
Yeah, that's the question. Is what were they going to do?
I don't know. I mean, there's clearly, we've created regulatory agencies before, and actually just recently, just before leaving, made the point that while our regulatory agencies are not perfect, and I deal with regulators on a very frequent basis, with automotive, communications with Starlink, and then FAA with rockets. So I've had a tremendous amount of interaction with regulators for a couple decades at least. And while regulators are not perfect, there's no regulatory agency that I'm aware of that I think we should, at the federal level at least, that we should delete.
Yeah. Do you think there should be a department of AI or something like that?
Yeah, I don't know what exactly. Perhaps a department of AI. It probably, let's say, I think the probability of there being some sort of AI regulatory agency that stands on its own, similar to the FAA or FCC, is likely at some point.
You think so?
I think so. Now, the reason that I've been such an advocate for AI safety in advance of sort of anything terrible happening is that I think the consequences of AI going wrong are severe. So we have to be proactive rather than reactive. In the past, if you take, say, and I'm being somewhat late for, speaking of regulators, sure. I'm a little late for the FAA. I'm meeting with the FAA.
We don't want to hold you up.
Administrator, but if you take the example of say, seatbelts were opposed by the auto industry for a very long time, even though the data was very clear that they're safe, that they radically improve deaths and injuries. So, we don't want to be in that situation where we're fighting regulations, even though there's a safety thing. We can't wait for millions of people to die in auto accidents. And it's important to just elevate the question here. The question is really one of civilizational risk. So it's not like one group versus another, one group of humans versus another. It's like, hey, this is something that's potentially risky for all humans everywhere. Very important to understand that.
Is there an equivalent of seatbelts for AI?
Do you think that Congress is sufficiently ready to regulate AI?
No, not yet. No, the sequence of events will not be jumping in at the deep end and making rules, but it starts with insight. In fact, this is actually how all of the regulatory bodies have been formed, I believe, is you start with a group formed to create insight, to understand the situation. Then you have proposed rulemaking. You'll get some objections from industry or whatever, and then ultimately you get sort of a consensus on rulemaking. That rulemaking then becomes law or regulation.
What's your message to an ordinary person,
I saw very little disagreement, actually.
Thank you, Elon.
Thank you.
Is AI, do you still want to have a cage fight with Mark Zuckerberg?
Elon Musk leaving Capitol Hill, speaking with our Eamon Javers right there. Excellent questioning, grabbing him on his way out. Had a lot to say. He said that he does believe there will probably be some kind of AI regulation, likely not swift, sort of noting how long the regulatory process can take, but he does believe it will go in the right direction. We're going to listen back in.
Some of the fragility of human civilization. And if you study history, I think you realize that there's a rise and fall to every civilization. Every civilization has sort of a lifespan, so we want us to last as long as possible.
But the ordinary person who may not know. I mean,
now Elon Musk is getting in his vehicle and is going ahead and leaving Capitol Hill. Our thanks again to Eamon Javers. That was excellent stuff and some nice questioning to Elon Musk. Mr. Musk also said that all hands were raised when they were asked if they do believe in some form of regulation for AI.
So hopefully all of you guys made it to this point in the video, because what we're about to talk about next has the potential to be a black swan event, or at least a gray swan event. Now, what a black swan event is, for anyone that is unfamiliar, it's something that comes along that really takes the market by surprise. Think COVID, right? The Rona. Think the banking crisis. Think even Evergrande to a lesser extent in 2022. Even the Fed raising rates as aggressively as they did to some degree was a black swan event because nobody expected it. It's something that nobody expects that can really re-alter expectations. For an example, tomorrow we're going to get the retail sales data. There's the potential that retail sales come in really bad. If that happens, well, the current markets are not expecting a recession. They're not expecting an imminent economic downturn. But if retail sales come in where I think they could, all of a sudden people are going to say, are we already in a recession? So a massive re-evaluation of theses, just overall investment theses, and the recession timeline, that could all change coming tomorrow. So the first thing I want to start with is actually providing a little bit of insight to retail sales specifically, because I'm talking about a recession. I'm talking about GDP expectations. And we've talked about this before, but we'll get into it again. But first, retail sales is a leading economic indicator. So there's data points that are lagged, right? Like the jobs report, that's very much a lagged indicator. You get the jobs report like 2 months after you're already, right? Like for a jobs report in August, we're not going to get that data until like September or October. And then by the time you get revised 3 editions, you're already knocking on 2024. So it's very much kind of lagged data. So it doesn't give you the best insight on what's actually happening in the economy today. Now, retail sales, that tends to be something that is more current. Now, it says retail sales is a leading indicator that tracks the amount of spending in an economy. This indicator provides information on how much money consumers are spending on various goods and services in the economic marketplace. The retail trade sector employed approximately 15.48 million people, or 10.1% of all total non-farm employees in 2022, and contributed 5.8% to GDP. 5.8% to GDP in 2022. Without good retail sales last year, retail spending, you would have been in a very deep recession. A lot of other things were not doing well in 2022. And still today, a lot of other sectors of the markets are not doing well. You've been in a manufacturing recession for the last 18 months. It's been brutal out there for certain sectors of the markets. That's where you get this rolling recession. The only place that has not rolled over seems to be retail spending and the consumer. And the problem with tomorrow is nobody's expecting the unexpected. Nobody's expecting retail sales to come in really bad tomorrow. Sure, we're expecting a decline from last month's reading of 0.7% for the month of July, for the first month of Q3. For the month of August, you're expecting 0.2%. So you're expecting a decline, but not into negative territory. And we were in negative territory. If you look at retail sales back here in November and December, and then in January and February, you were also negative. But what has happened recently is you've seen retail sales actually recover. Retail sales is the single biggest contributing factor to your GDP estimates. And that's the part that is kind of the black swan, the recession, the GDP outlook for this current quarter. Now, before we talk about that, look at what the markets did in this time frame. October through November. The markets themselves seen a massive decline. At the same time, retail sales fell 1.3% on a month-over-month basis. So tomorrow is specifically important because of the GDP estimates and how high they are. So 1 month ago, your consensus view for GDP was less than 1%. Today, your consensus Wall Street view for Q3 GDP is at 2.4%. The Atlanta Fed GDP Now tracker is at 5.6%. But this doesn't matter as much. It will update coming tomorrow after retail sales. So we're going to get a fresh new update from the Atlanta Fed GDP Now. And you guys can see right here for Thursday, September 14th, it will update. That's because of personal spending. So overall, you've seen the estimates go from about 0.9% to 2.4% in the course of the last month. Take it back to June 27th, which was less than 2 months ago. Less than 2 months ago, guys. Less than 2 months ago. And your GDP estimate was 0%. It was negative before then. Look, right here. I mean, you really can't even make this up. It was negative. Or like right on zero. The prior kind of month before that, or a couple weeks before that, it was negative. So now you've gotten some huge expectations, and it's one of those scenarios where if GDP estimates were 1% or less heading into tomorrow, this would not be such a big event if retail sales were negative. It's one of those things where the markets can handle bad news. They cannot handle uncertainty. This is kind of like an earnings report, like an Oracle that reported yesterday. In the grand scope of things, Oracle didn't have too bad of numbers, but the stock sold off yesterday about 14%. At the lowest point was down 16+%. When their numbers actually beat estimates, that's because the stock was at all-time highs. You needed something much better than that to see the stock continue higher. Kind of like in Adobe coming tomorrow. Stock's not at all-time highs, but it's up almost 100% for this year. So you need really good results. And I do personally have a trade on Adobe that I'm really excited for to play their earnings tomorrow. If you guys want to come trade with me live in real time, every time I send out or make trades, I send out alerts, all of that, you'll get access to it. Come join the community over there. But I hope you guys get the point of what I'm trying to say. The GDP expectations are way up here. Retail sales could really disappoint. That means GDP expectations or estimates will likely come down. And that's where you have a problem of this recession. It's really not priced into the markets, like literally at all. So what are my expectations for retail sales? Well, it's hard to come to my own expectations because I see a lot of the real economy. I know a lot of people that work in restaurants that I know like very well. Like my mother works in a restaurant. I work in a restaurant sometimes. A lot of people. I know a lot of people that are even in like GM and work for Ford and work at other manufacturing facilities, that work at Amazon, that work just a bunch of different places. So I get a lot of kind of real world data in that regard. Just even going to the store, I think it's pretty easy to see. I mean, just look at what a Dollar General or a Walmart or a Target has been saying. People are only buying essentials. They're not going out and buying that product that they just wanted to have because they had extra money. So restaurants, considerably slower. Even like delivery drivers have been reporting that they are slower, delivering less packages each kind of trip they're making. Stores are clearly, obviously, a lot slower than they were before. You can go in your local Dollar General and, I mean, there is like hardly anyone in the stores. And that's the same for Walmart and other places as well. Again, I live in Michigan, so if you live in like LA or somewhere with a bunch of people, then that's obviously going to be different, and you might not be able to see the actual changes of consumer behavior. But I have been basically on the front line of this, and it does not look good. What I hear from people as well does not look good. So my estimates for retail sales are around negative 0.5%. That's what I think the number is going to come out as. There's obviously revisions here as well, so we'll get revised numbers over the next couple of months. And odds are, if the number is negative, then it's probably going to get revised even more negative. And the markets know there's revisions. So for an example, if we come out with a negative number, like a negative 0.5%, the markets are going to sit here and say, wow, we're probably going to get revised even lower. We might be in a recession right now. So that's why I think tomorrow it has the potential to be, to some degree, a black swan event. I see a big disconnect between the actual economy and what consumer behaviors are today compared to the GDP estimates that have went from 0% to less than 2 months ago to 2.4% today. This is really strong economic growth. And retail sales is the #1 biggest factor that plays a role in your GDP estimates. Last month, you had 0.7% GDP. 0.7% retail sales. So it's no surprise the estimates for Q3 GDP have skyrocketed over the last 2 months or so. So, I mean, that's kind of how I'm looking at this. I obviously could be wrong. The numbers are cooked, it feels like, most of the time. Most of the time, it doesn't feel like there's real numbers out there regardless. But that could be a problem. Coming tomorrow is retail sales. Now, your GDP number comes out October 26th. So either way you put it, and the reason I want to have hedges on my portfolio is I don't think GDP expectations go up from here heading into October 26th. I think there's a 98% chance GDP estimates come down before they go higher heading into October 26th. GDP estimates coming down are not going to be great. And GDP estimates being at 2.4% is one of the main things you hear if you ever watch Yahoo Finance or CNBC or Schwab Network or TD Network or any other news outlet, Bloomberg. They all talk about the consumer's resilient and strong GDP for Q3. I just don't think that is likely. Now, your PPI month over month, that's going to be interesting because this could put a profit crunch on the table as well. So what we heard from the Fed Beige book was exactly this as well, that consumers are slowing down. They're only spending on essentials. There's really a lot of weakness in manufacturing goods as well as consumer goods. That's what we heard from the Beige book last week. The Beige book also said that a lot of districts are reporting prices are increasing to make products, but companies are having a hard time passing those costs on. So PPI is producer price index. Think of it like producer price inflation. CPI, consumer price index, think of it as consumer price inflation. So PPI is your producer side of inflation. So if PPI goes higher, that's not great for company earnings if CPI, not your headline, but your core, is at 0.3%, but your month over month PPI is at 0.4%, that is actually a net negative to margins, which is another reason why the markets have done so well in 2023. Companies really cut back on cost in 2022 and got margins better than they've ever been in the business cycle history. So this is also another potential negative. If this does surprise to the upside, you might have some people talking about compression of margins. Now, tomorrow morning, you're also going to get the ECB press conference. So you're expecting, let's see, I don't believe you're expecting another rate hike. Let's see, right here, September 14th. You are, so consensus is 4.25%. The TE forecast is 4.5%. So some people are expecting a rate hike. Some people are not. It looks kind of mixed here. This is the first divergence that you have seen in any of the Fed meetings since May 4th. So you are actually, to some degree, expecting a rate hike. And that would probably not be a great thing for our markets as well. Now, as far as what this could do for the markets and for Tesla stock, I'm saying it could be a black swan event. A black swan event can cause a 10% plus correction in the markets pretty quickly. And again, just for like the 20,000th time, you get the black swan event based on expectations being up here for GDP, and then just with one data point, everyone saying, whoa, are we in a recession? Because retail sales were just negative. That's the potential that I think is possible here. Now, I think there's actually like a 60% chance retail sales are negative. Maybe 70% chance. A very, very high likelihood that retail sales are negative. Now, I don't think you get the black swan event unless you are negative like 0.5% to 1 to 2%. Especially if you were negative like 2%, I would expect a really, really bad day tomorrow. A 3, 4, 5% down move because, again, the markets are not pricing in a recession at all. The markets were pricing in a recession in October. of 2022. That's for sure. And look at where the S&P was, or the SPY, around 350. You are, what? Let's go ahead and see. From 350 till now, you have rallied 27% on the S&P. There is no recession priced in. So this is a problem. I think it has the potential to be a black swan event. I could be wrong. This does not mean you have to go crazy with hedges. Good thing is, if you do not have hedges on your portfolio already, well, you're going to know pretty soon, coming tomorrow morning, whether this is something that is going to be a bigger problem or not. And I think you can react to the data after the fact, considering markets are up so much. Even if we do get bad data and the markets do crater like a rock tomorrow, well, you could still hedge out your portfolio and protect yourself, even though you don't have any hedges on the first day we got the bad news. Now, ultimately, I think there's probably a 30% chance. The numbers are a little bit strange how they calculate retail sales, and we could come in line with expectations. And at that point, I wouldn't expect too much negativity, but I still think the expectations are, really high based on what stocks have done recently. I don't think 0.2% retail sales is quite enough to get stocks to continue higher from here. I think you need to see some really good numbers. If you do come in line with expectations, 0.2% month over month, you probably still fall around 0.5% tomorrow. But it's not that black swan event, that whole nobody's expecting a recession today. Tomorrow, people are wondering if we're already in a recession. That's where you get the black swan. I don't know if that happens unless you get really, really bad retail sales. But I think there's a chance. I think there's probably a 10-15% chance retail sales come in negative over 1%. 20% maybe, just based on what I have seen in the real economy. If not this month, next month retail sales I would expect to be really, really bad, guys. So let me know what you think about all of this down below in the comment section. Let me know what you think about the markets. Are you hedging? Are you concerned about this at all either? Now, obviously, if you're a long-term investor, nothing to be concerned about. You buy the dip. That's a blessing if stocks come down. We already understand this. But for those of you that kind of are not as familiar with what's going on, hopefully this video did resonate well with you. Share this video with a friend as well. Like the video if you are a current investor in Tesla stock. And check out the links down below in the description of this video if you guys want to come trade with us live in real time. I send out all of my trades. Adobe is going to be reporting earnings tomorrow, and that is something I have hinted at. Looking to make a pretty large position. Make it, well, we already started the position, but make it free. Hold some free contracts into earnings. We'll see what happens. That one could pay out huge if we are correct. Obviously, no guarantees. None of this is financial advice. Anything can happen in the markets. So yeah, my name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.